Welcome everybody back to Fast CPA and Consultants YouTube channel. As every afternoon, here we are with our CPA, Fulton Abraham Sanchez. Hi, Fulton, welcome back.
Thank you, Monica.
Thank you. So, as you may know, in Fast CPA and Consultants channel, we make videos that answer the most asked questions from our clients and our community. So in this opportunity, we are going to talk about the importance of accounting in companies. So we are beginning our accounting talk. So Fulton, let me start with the first question, which is, why accounting is important?
Okay, accounting is important because it provides the business the information to take decisions. That is the basics of accounting. Is the summary of all transactions that you have in a year or in a period of a month, a quarter, and instead of having bank transactions or invoices or records, you have an orderly set of financial statements. And those financial statements will allow the business to see the picture. What is going on? Why, or what is the result of the decisions that the owners of the business has taken and how those decisions has impacted the business.
Got it. And what are the types of accounting?
There are two types of accounting. One is accrual and the other one is cash. The difference between the two is, for example, when I do cash accounting, I don't report accounts payable and accounts receivable. It means that whatever I collect is income, whatever I pay is expenses. That's the principle of cash accounting. Cash accounting is, for example, when you do a payment of a check or you receive a payment from a client, and you at that point you consider that as income for your company. That's cash accounting. Cash accounting means you only go by what you pay and what you receive or you collect from your clients. And based on that, you do your reporting, your balance sheet, your profit and loss, and your cash flow, which is the objective of the accounting. Say, following the first question, why accounting is important? It's important because it will provide you with a set of financial statements that will allow you to improve your understanding of the business. It's simple as a resume or a curriculum vitae. If you don't know the person, if you're going to employ a person, the first thing that you ask is, show me your resume or your curriculum vitae. And what information will be there? It will be all the personal information, the information for the individual, qualifications, abilities, and educations. Same thing is financial statements. It will show the financial conditions, the resources, how they have been spent, what have been the uses and the sources of all the resources, and if you have a profit or if you have a loss. That's why it's important, this financial statement that come from our accounting. These reports, the balance sheet, the income statement, and the cash flow are the result of accounting activity. And they are the most important ones. These financial statements, you can do it two ways to answer the second question: cash accounting or accrual accounting. I already said how we do a cash accounting. Cash accounting is basically you only report in those financial statements when you earn, when you collect, and when you pay your expenses. And accrual accounting is a little different. In accrual accounting, I am going to report my accounts receivable and my accounts payable. Now remember, accounts payables and accounts receivable, they are not collected. You have not collected your accounts receivable and you have not paid your accounts payable. But even though you have not paid them or collect them, you are reporting them. And that is the basic difference between cash accounting and accrual accounting, the types of accounting that companies do. Here in the US, companies with over $50 million, they are obligated to do accrual accounting. Small businesses, no. Small businesses up to 50 million, no, 25 million, they are able to do cash accounting. So the basic difference is how you account for the account receivable and the accounts payable. An account receivable is basically, for example, if you are consulting with me, you send me a bill, right? Yeah, but I don't pay you and you don't collect it yet. For you, it will be an account receivable. If you do accrual accounting, for you it will be income, but you have not collected the income yet. Even though you have not collected that income, you are reporting that on your financial statements in an account that is known as account receivable. For me, your bill is going to be an accounts payable, but I have not paid it yet. But because I do accrual accounting, I am going to report the accounts payable as the bill as an accounts payable that I have to pay it later. And for me, it's going to be an expense. It's going to be a payable, but it's also an expense in my profit and loss. So for me, is in the balance sheet is going to be an accounts payable, but in the profit and loss report is going to be an expense. And for you, it's going to be account receivable in the balance sheet, and also in the profit and loss statement is going to be income. That is the nature of the two types of accounting.
Understood. Thank you. And this is a really simple question, but really asked question. Who needs accounting?
Everyone who owns a business. Every individual who wants to know where his or her money is going to. If you don't have accounting, say you only have your bank statements. And that is what you do. You only go by the balance of your bank statement, right? You are an individual or a company. You only go by that. And you decide based on the bank statement. The problem is that you never know what is the categories of the class or the classes of your expenses. What do you expense in or on? What do you expense on? What is the classification of all these expenses that you have? Because you don't have accounting, you don't have control. You don't know if you need to reduce one particular category of expense, let's say utilities, let's say payments for subscriptions, let's say payment for commissions, let's say payment for salaries. You don't know because you only go by the balance on your bank statements. But if you have accounting, you will have control. That is the most important thing in accounting, that you have control over the expenses. That's why accountants and personal financial advisors, they insist that not only the companies must have accounting, but also the individual. It's about control. Control of what? Control of the most important thing that you have after your life, money. Because
right.
Once you have control, you can take action. And those actions are taken to improve yourself. That's why accounting is so important, because it will give you control. Same thing. If you don't know who your clients are, you don't know how much you are receiving for each client, you don't know to whom to give a promotion, for example. You don't know, because you only know that you have collected X amount from clients, or X number of clients have paid you, but you don't know who. You don't have a list of clients, you don't have a list of expenses. You don't know how to control. So you will not be able to apply to create promotions. You will not be able to create strategies. You don't know what markets you are, what are your market. If you know all this by your heart, that's fine, but if you know it in your mind, you don't have control. Control is you have to put it in writing. And in writing, you have to show it to someone to help you to take decisions. That is why every single person, not only businesses, but also individuals, need to have a accounting process to provide for their financial statements and to take control of their money. That's why accounting is important, and that's why every single person in the world needs accounting.
That's really, really clear. So the next one is, what are accounting process?
The accounting process is a transformation of transactions into financial reports. Financial reports as balance sheet, profit and loss, and cash flow. The balance sheet is a representation of all your assets, like cash, like inventory, like account receivable, like fixed assets, your liabilities, all your accounts payable, and your debts, and your equity, the capital that you have provided for the business. That is the balance sheet, assets, liabilities, and equity. For the profit and loss is only income minus expenses. That's the profit and loss. It's how much money you make. And at the end, the cash flow is a report that few people use it or require it, but it's very handy, or it comes handy when you want to know what is the sources of your cash and what are the uses of your cash. So this is not about assets or liability. This is what is the sources of your cash and how you have used that cash.
Got it. And what is the difference of accounting and bookkeeping?
Bookkeeping is only doing the books. That's why bookkeeping is keeping the books, meaning providing the financial statements. That's it. Reviewing the transactions and doing your books. That's the books and bookkeeping. Accounting is a little more. Accounting involves using the financial statement that come from bookkeeping to take decisions. That's why you are accountable. That's the accounting thing. Accounting is to be accountable. Accountable for something. Accountable for the resources that you have used, the assets and liabilities and equity that you have in a balance sheet, the income and expenses that you have in your profit and loss, and the uses and sources of your cash that you have in the cash flow report. How they have been created, and you are accountable for those reports that now are in your hands. That's why perhaps many people don't like to see the financial statement, because now when they see them, they have to be accountable. That's accounting. That's all accounting. It's all accounting about. Accounting is to be accountable for the resources that you have in your hands in a month, in a year, in a quarter, in a year, and how you have used those resources. What is the use that you have for those resources? That's why people don't like to see the report, because now they are accountable, and now they have to provide account. They have to provide a testimony why they did this and why they didn't do differently. That's why it's the difference between one and the other. The bookkeeping is just the books. You keep the books. Yeah, but what are you going to do with the books? You have to be accountable. Now you're accountable of the books for the decisions that you have taken, those with the money that you have, how the money have been given to you from your clients, and how you have been using that money for your expenses, and how those decisions with the money that you receive and the money you pay are expressed or are reported on the financial statements. And for that, you are accountable.
Understood. That's really, really clear. And here we have the last question of this video, of this first episode. What are the advantages of bookkeeping?
The advantage of bookkeeping is that you will become accountable, that it will force you to take action. to improve your life or improve your business. In the case of, for example, in the case of a business, you have a balance sheet, you have an income statement, and now you have the classification for each one of these expenses that you have. Ideally, you will compare those expenses to the average of your industry, in your industry, and if you are over, you need to come down. Because that is the nature of the accounting, I'm sorry, of the bookkeeping, is that with the books provided, when the books are taken care of, you have taken care of your books, the book will give you reports. Those reports are the financial statements. Those financial statements will allow you to take action to improve the company, create promotions, give discounts to clients who are loyal clients, reduce your expenses, fire people who are not, reduce your payroll because you have too much payroll, reduce your expenses in subscriptions, reduce your expenses in utilities. This will give you control, and because of that, you are accountable. That's why bookkeeping has an advantage, in that many people prefer to do it at the end of the year and not do it in a monthly basis, on a quarterly basis. But I will suggest do your books, be accountable, meet your accountant at least once a quarter, and plan for the future. This is something else that the financial statement will give you. Another advantage of bookkeeping is that it will allow you to plan for the future. It will give you the ability to plan and create a strategy to grow. You cannot grow if you don't have numbers. Imagine, for example, if you went to a school and you have no grades. It's no grades. So you just go to a school. How do you know if you're approving the class, if you're passing the class? How do you know if you are the best student? Or how do you know if your work has been graded? No, there's no grades here. In this school, you just come, listen, do your homework, and you're never graded. What would be the objective? Is no grades, no notes, no qualifications for you. In bookkeeping, it is translated the same as in school. The objective of bookkeeping is to give you grades, to give you numbers, to give you the numerical representation of your decisions. So you do decision for the whole year, but those decisions are represented in a number. And it could be positive, it could be negative, but if it's negative or it's positive, it will be the result of your decisions. And because of that, you have the chance to change, to plan, to create a strategy to improve and to grow. Those are the advantages of bookkeeping.
Got it. Well, that's it for today. Thank you, everybody, for joining us. We really hope that this information has been really helpful for you. So please start taking control of your life and your business and your future. You need accounting for that. That is clear. Yeah. And also, please remember to follow us on our social networks, like in Facebook, when we have an exclusive group. And believe us, if you are watching this video, you want to be in that group. And before leaving, also check if you have already subscribed to our channel so you can be notified when we publish new videos about accounts, taxes, and all other topics related. Thank you very much and see you soon. Thank you, Fulton. Bye-bye.
Thank you. Bye.